Every year, hundreds of legal actions are brought to recover losses from cases of corporate fraud or mis-selling, which have negatively impacted on the value of pension funds. Investor action specialists Institutional Protection help their clients to recover losses and manage risks to preserve the long-term value of their investments. Nick Thatcher reports.
Pension funds lose billions every year when their money is invested in companies that commit corporate malpractice, such as fraud, misrepresentation or mis-selling.
The scale of this is absolutely phenomenal, and we continue to see more and more corporate fraud cases every year, and that's a really significant impact on pension funds.
Caroline Goodman set up Institutional Protection in 2004. The company provides a complete management system for institutional investors to manage their response to the 500 new shareholder litigation cases that arise every year across more than 30 jurisdictions. Shareholder actions allow investors to recover losses and potentially change the behaviour of companies to improve long-term value.
Pension funds have a duty to understand the impact of all of these shareholder actions, to take appropriate action, and importantly, to recover monies for their beneficiaries.
The software monitors live and past litigation cases and looks at everything the institutional investors have purchased and sold on the stock market to determine the impact and options the investor has.
We are able, at the click of a button, to identify whether they are eligible to join any particular action. From there, we can carry out almost instantaneous analysis of their exposure and their likely loss. And if they have that, then we have the documentary evidence that we can provide to third parties, whether they are law firms, settlement administrators, and provide all of that information to them, and as well as giving the client all of the necessary information that they need so they can make a valued judgment as to whether they wish to participate.
We certainly recover for our clients tens of millions each year, and tens of billions are recovered for investors en masse.
Caring about the planet and society is important, and stakeholder litigation can push companies to care too.
Frances is head of responsible investment at LPPI, which manages £20 billion of local government pension scheme assets.
Shareholder litigation forms part of our stewardship of the portfolio that we manage for those client pension funds. So it's part of a strong commitment that our client funds and we have to responsible investment. And that's sort of recognising that that doesn't stop with what we invest in. It extends into the sort of ownership of those holdings, to be looking at the conduct of companies and the way in which those companies operate.
Being able to keep a close eye on all these cases and take the right action at the right time can lead to real change.
One of the most impactful cases that I've been involved in covered quite a broad range of issues, from increasing board independence to changing the role between the company and the controlling shareholder, and also altering the related party transaction process.
Our 5 trillion client base on their own certainly carries a lot of clout. Institutional investors generally, I think, are flexing their muscles more, demanding more in the ESG space.
There are benefits to the broader society. There are benefits to the company's employees. And of course, there are benefits to the outside shareholders, including pension fund members.
Frances has worked with IP for a number of years.
Administratively, they take the burden away from us. They're really friendly guys. They're there when you need them. It's an extra member of the team, ultimately.
This all sounds like large amounts of money flying from one pot to the other, but ultimately there's a real purpose in this, and that's increasing retirement pots for the future. Also about holding companies to account, and that's important. This is fundamentally about doing the right thing.